Aloha everyone, Joshua Hayes at BigWaveTrading.com. I hope you are enjoying your holiday Thanksgiving weekend so far. I want to wish everyone a happy Thanksgiving. In this video lesson, I just want to review two trades from Wednesday. The biggest loser, which you're looking at right now, which in aggregate of all those stops are negative 2%, and my biggest winner, which is HEPA, which is currently, I've locked in 57% gains. At the top, it was up 132% and currently is up 75%. And I just want to go over each of these and show you how stop management can really help you. But for now, if you want to pause this video, look at these EVH orders. This all happened on Wednesday. Even though that says 439, I am on Maui at 5 hours, and you have your New York Stock Exchange at time. So it's really 939 down to 943. But you can see how each of these stops ripped off throughout the session as this big red bar happened. So now let's get into the EVH trades now that you've seen that. So first off, the white arrow is gone. I've already removed it from my watch list that this is in IntelliChart, but this was the signal day. Is there anything that should have probably prevented me from taking this signal? Maybe. BOP, my balance of power indicator, fell on that day. But that being said, EVH had a heavy short float. Let me go ahead and check my other computers right now. I believe it was over 20%, and I am correct, 20.34% on FinViz. So I had a heavy short float, got a candle over candle buy signal, heavier above average volume, pocket pivot point signal, still had a nice solid area of balance of power in favor of EVH. The stock triggers and fills at 9:58 because my good to cancel buy stop limit order is always 1 cent above the high of the day of the signal date. Perfect entry or no entry, you have no idea how many winning positions the past week I wasn't a part of because either I didn't have enough capital in my end of day account, which you just saw with that order screen, that came from my end of day account, and or due to the lack of capital, it either triggered and canceled by the Interactive Brokers Trader Workstation system, and or triggered and just didn't fill, and they just run without me. But EVH, 958 filled. Initially, my first stop is here. My emergency initial final stop, is right there. And what's so funny is that it came into play. Now, EVH, as it went up each day, I'm very aggressive with my stop orders. Want to make it very clear, hate talking about this stuff, but bottom line is the minimum per order I place is $5,000. My commissions, I should say, at Interactive Brokers are $1 per trade, depending on how many shares I make up to. But if I take like 100 shares, it's $1 on each exit of these 100 shares that I have. So getting in, it's about $1 commission. Getting out, $1 commission. I put enough capital into each trade that it makes sense for me because of what happened on Friday. It's the reason why I do this. So EVH is up this day. I add a stop. I now have 3 stops on EVH. The very next day, EVH, there's really not much difference. Price action, volume's lower, and it looks like BOP is staying the same. No added stop. The next day, we got another pocket pivot point signal on heavier volume. So I go ahead, and I know it's splitting hairs, but I add a stop. 1, 2. It's starting to get ridiculous now already. 1, 2, 3, 4, 5. Seems ridiculous until you see what happens on Friday, as you've already seen. This day, there's now another stop. So now I add a stop here. Then on this day, no need to change anything because it's still within that normal price range and it's splitting hairs a little too much, so no stop. Then on this day, I add a stop. So now I have 1, 2, 3, 4, 5, 6. Now, I can't remember what I've done, but as you just saw, I think there was only 6 that triggered. So I either consolidated these or I consolidated these. And the 1, 2, 3, 4, 5, 6 with the stops. The next day, you don't need to add a stop. And then what happened on Friday? Or Wednesday. It's Wednesday. Bam. Now, at one point intraday, EVH was all the way down to $6 per share. What if I didn't have any stops on the book? Even though it closed at 776, what would that loss have been? 18+%. So thank goodness I had stops, because all of those stops that you saw, when you add them all together, divide by 7. I think I did have 7 actually. Let me go ahead and check really quick. Yep, 7 it is. So there were 7. I could have just checked on my other monitors. I could have just pulled it up on my interactive broker station. Don't know why I needed to pull it back up over here. But either way, there were 7 stops. In aggregate, you add all of those together, divided by 7, comes out to 938. What was our entry price? 958. What's the total loss on that? About negative 2%. So on an end-of-day basis, the stock lost. That means if you bought it at a day market buy order, the day of my signal, the very next morning, and then sold and are going to sell it on Friday morning, assuming there's no slippage within the spread, you're going to lose 18%. But by using my trailing stop methodology, using good to cancel sell stop orders, that's where I had it 1 cent below the low day of each of these sessions, the total loss on the position for me was negative 2%. And at one point intraday, as you can clearly see, I have no idea what that loss is, but I can assume it's right around 40% just based on doing the math in my head. So it could have been a 40% loss on an end-of-day basis without stops. And instead, all of the stops in aggregate left me with a negative 2% loss. I don't know what that was. It fell on me there. Sorry, everybody, for that pause. Something fell on me over here. So now with that being said, that's EVH. I'm showing you how to trail stops up. You could have always have done that uptrend line that I told you about, and whenever it closes below the uptrend line, not closes, violates the uptrend line, you can sell your position. But my methodology with the uptrend line, I always tell people, is you wait for a close below the uptrend line, and you see that wouldn't have saved you. The only thing that saved you was those good to cancel sell stop orders. I'm very happy for them. This EVH is the most perfect example I can give anyone of why I use trailing stops and am so aggressive on my stops. A negative 18% end of day loss, a potential negative 40% loss led to only a negative 2% loss. So now let's go over the winning position, which was awesome, from Wednesday's session. All right, what you're looking at is HEPA, Hepian. This was a very hot stock on Wednesday, but we were already in it. Now, that being said, HEPA, if you all remember, so look at this right now. Look at the entry, 359, November 25th. It was at 9:02, which is 2:02 p.m. New York Stock Exchange time. You can see that was the 25th. And on the 26th, we hit one profit target. I had a limit at 455. Split that up. Placed another limit at 559. That got hit. Split that up. Placed another limit at 674. Now we'll go on with the analysis now that you've seen that. So either remember that, write that down, and now let's go review the trade. So HEPA gives me this signal this day. It's a very speculative trade, so I only give it out to members that are on the platinum side of big wave trading. It's a very inexpensive service. So the top line service, platinum, whatever, it's not that expensive. So whatever. But anyway, it's because it's so speculative. Like the quality long positions I like to give everybody because it's liquid, there's tight spreads, you can get in and out with barely any slippage, and you don't have to worry about any crazy offering or overnight dramatic news event catalyst that could just take the stock down, like even in EVH. EVH was given out only as a speculative long position. These are not quality plays. Well, HEPA was not a quality play, but one thing that interested me is I checked out each HEPA on FinViz, didn't get a good short float on it. I check HEPA out on Yahoo, and I go down and I see that it has a short float. At the time, it said 60%. I checked Trade Ideas, and that's what it said. Now I go look at, I don't have my Trade Ideas scanners up, but now I go look at Yahoo, and it says it's 16%. Either way, that's a big enough short float that I'm interested. And I want you guys to notice, do you see all this green in this chart? Green balance of power, green balance of power. It's reflected in the price chart. Do you notice all the wicks and just in the chart pattern along with the bullish closes? Even though there's gap up and reversals, it kind of holds up pretty well. There's no really heavy volume selling. So I attempted to go long HEPA back here, but I was stopped out. so I took small losses. But I got the same kind of signal on the 22nd, so I set up my good to cancel buy stop limit order at 369, and my one and only cut loss level is 1 cent below the low a day, 319. So that's how the order's set up. I get filled at 369, and then if it fails, I cut my losses at 319. No harm, no foul. It's liquid enough that I don't have to worry about any slippage. Now the next day happens, nothing. You see that the high day is 367, the trade doesn't trigger. Now I want to remind everybody, LK on this day here gave me a long signal, and the game plan was to get it over 2174, but it gapped up, but in the pre-market I could see it rising, so I decided to do something a little crazy that I haven't done in about 2 years. Crazy for me because I don't chase. Perfect price or no price, remember? But I did, and I bought LK at the market because I had limited funds, and I wanted to make sure that the limited funds I had, there wasn't another order to trigger and fill that I could actually get into LK. Wow, that turned out to work really well because I got long LK, it jumped 25%, and within a few sessions, it already hit my first profit target, split up my good to cancel sell limit orders, which are profit target levels, put the next one at 30.33, hit that one, keeps moving higher, and I'm still long LK to right now, to this day, and it has over a 40% gain. So that's being said because on HEPA, you'll remember my good to cancel buy stop limit price was at 369, but you saw that I got long at 359 on November 25th. That's because on this day here, I had a feeling with the limited capital, it was so close to this price already triggering at one point intraday that I had a feeling that if HPA goes, I risk it not filling because another stock that I have on the ledger could trigger and fill that I don't have as much conviction in, that I don't think is going to have as a big ATR move. This one can have a lot of beta, as you can see, whenever it does move. So I went ahead and went at the market at HEPA and bought it at 359. The very next day, pop, turned out well. And as you saw, whenever I went long, so now I'm long HEPA, this day, I only have one stop, and that's right there, 319. My first profit target on HEPA after I get long, so now I'm long, right? I set my good to cancel stop level, 1 cent below the low day, 319, and now I set, so if I take 1,000 shares, I have 1,000 at that stop level. I split up profit targets, and I put 500 shares at 455, and then I put 500 shares at 559. And that's because these are end-of-day positions. When I'm day trading, I'm not focused on these positions. Right now, I kind of have to be in the morning because of the cluster that it is with all the outstanding orders. I see a canceled order and I have to move it, and then if I really want a position on a swing trade basis, this accountant's got the most capital in it, I have to get long, so now I'm focused, and it kind of takes my attention away from the names I like to day trade in the morning and throughout the day. Remember, whenever I'm day trading, most I'm ever long at one time or short is 1 to 2. The most I'm ever intensely focused on is 3 to 4. Compare that to my end of day methodology where I can hold hundreds if hundreds are going up. But either way, HEPA triggers and fills. That's how I set my stop. So I get 1,000. If I get 1,000 shares, 1,000 go below here, 500 here. We're using 1,000 to keep it simple. It was more than that. 455 and then 559. So HEPA on the very first day, bam, as you can see, it hit the target. 469 close, nice 28% gain in one day. Now I only have 500 shares left. So now what I do, 250 goes at 559. The next point of resistance that I can see, 674. I'm always looking at the most recent resistance points. After 674, it would be the 200-day moving average. But on this price now, the 200-day moving average is too close. There's not enough separation or gap. I like symmetry to use that as my next target level. But for now, for this case, we're here at 559 and we're here at 674. So then the next session, which was yesterday, bam, boom, zoom. So because HEPA is such a hot stock and in play, remember, I don't want to follow these intraday.
but it's lighting up all of my intraday scanners. So every time HEPA is hitting a new high of day, I have heavy, high float, massive volume, low float, massive volume. I have secondary scanners that look for volume surges, 5-minute breakouts, opening range breakouts, etc. But HEPA is hitting a ton of these secondary trade idea scanners. So I can't help but watch it. So then on that day, I see that it then hits the 558 limit. Now I split my orders up to 674. What's the next logical area of resistance that I can see? It's all splitting hairs between here and the 200-day moving average, so I see it as the gap fill of 960. So that's what I do there. So the gap fill of 960 after it hits 559. So now, out of that 250 that was left, 125 are here, 125 are here. The stock keeps moving on intraday, and near the later end of the session, the end of the session on Wednesday, it hits 674. So now I have it 674. So now I have to take what's left there, the 125, split it in half. Half now goes to 960 at the time, intraday, and then what's the next logical resistance level? That same bar's high of the day. So now I have a stop, I'm going to always misuse that terminology, but on the upside, on a long, I'm always talking about limits. So now I change my good to cancel sell limits to half at 960, half at 1649 in case they hit during the intraday session on Wednesday. But that did not happen. HEPA got all the way up to 835, which, by the way, from our entry point to the high of the day, that's a 132% gain in 2 sessions. You're welcome. It's not going to always be like that. That's pretty awesome. So it reverses off the high, and this is where it closed. And as we stand now on a closing basis, the stock is up 75%, not too shabby, but with the big intraday reversal, my now split stops are at 835 and then this high of the day at 1649. So heading into Friday's session, what I have left, 50% of my good to cancel sell limits are at 835. The other half is at 1649, which seems impossible to hit, but you never know. Now on the flip side, how are my stops now set up? So on what I have left, 1/3 is 1 cent below this low a day, 1/3 is below this low a day, and 1/3 is below this low a day. So far, I've locked in a total of 57% gain so far on HEPA, 132% gain at the top, 75% gain at a closing basis. And now let's revert back to EVH. My biggest loser, my only, which was incredible, my quality long positions page, if you're a subscriber or a member or even have access to the stock Twitch room, you will see there was not one quality end-of-day sell signal. There wasn't a 50% end-of-day sell signal or a 100% end-of-day sell signal. I know that Wednesday was a solid session, but that's incredible and just tells you and shows you how strong this market is. But once again, let's compare that 57% gain locked in, 132% gain at the top, 75% current gain in HEPA compared to my 2% loss in EVH thanks to my trailing stops. So that was my biggest loser from Wednesday's session, and HEPA was my biggest winner from Wednesday's session. I hope this Thanksgiving video helped explain how I trail stops, helped show you how I set profit targets. I don't think I told everybody, but on EVH, whenever I went long, because once again, so if a stock is hitting new highs, so I didn't get long Costco because whenever it triggered to fill, I didn't have enough capital for it. But look at Costco. It's at all-time highs. This was actually a new long position for members. There's no profit target area. I just let it go. I could do symmetry retracements from the previous high to low to here and see where it goes to. So I could do that constantly and do Fibonacci symmetry. I could do Fibonacci basically retracements and then see what the 127, 168 projected levels are and use those as potential profit taking points. But with using price, there is no next resistance point. So I just let it run. But on stocks that I get that are near the lows, I always find I try to find areas to take profits. And with EVH, the only first logical place that I could see was this high level here around 15. So that, by the way, that's where then my first profit target was on EVH. And then it was all the way up here because those are the only two logical points that I could find on this chart. But as we saw intraday, it didn't matter. Never came to fruition. All right, everybody. That's it for me. Once again, happy Thanksgiving. Aloha.